Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Wednesday, July 13th, 2022, and I'm pre-recording this Trading Places Live for Thursday, July 14th. Currently, we do show futures down a little bit. Dow futures down about 68 points, or just under 1/4%. S&P 500 futures down about 10.5, which is a little bit more than 1/4%. NASDAQ futures down about 38, which is about 1/3 of 1%. Crude oil trading pretty flat right now, right at about $96 a barrel. 10-year Treasury yield up 5 basis points, back to 2.96%. It was a wild day in the bond market on Wednesday after the big CPI report came out in the morning. We saw the yield jump pretty rapidly up to about the 307 level, and then saw it fall all the way back down to 290. And like I said, right now we're back up to about 295, 296. We'll see how we do tomorrow, but that was a pretty significant reversal on the 10-year Treasury yield on Wednesday. All right, before we get into the action, let me just walk you through today's agenda. Daily market recap, talking technically. Going to give you my outlook on the Dow 30. I'm going to quickly go through all Dow 30 stocks. I think, yeah, well, we'll take a look at them. Some of them I think pretty bullish, others not so much. Then we'll get into the earnings spotlight, and we'll wrap up the show with the 3 you must see. First, let me take you over to earningsbeats.com. If you go over to earningsbeats.com, scroll down, there is a place where you can sign up for our free Earnings Beats Digest newsletter. It's published 3 times a week, Mondays, Wednesdays, and Fridays. All it takes is a name, email address, hit that subscribe button. There's no credit card required. You can unsubscribe at any time. This is mostly an educational newsletter. I try to teach a lot of the things that I've learned over the years. So we do focus a lot on earnings, relative strength, candlesticks, gaps, those types of things. One really significant benefit to being in our community, the Earnings Beats Digest community, is that when we have free events, you are more than welcome to join us. So anybody who's on our newsletter, we will send out room instructions so that you can join us. And Monday, this Monday, July 18th, we are going to have our Q2 earnings sneak preview, where I'm going to go out and take a look at a lot of upcoming earnings reports and provide you my analysis in stocks that I think are going to give really strong reports versus others I think might be a lot weaker. Anyway, it's a great way to learn a little bit about, I think forecasting potential moves with earnings. Looking to try and spot those companies that are likely to report great results. Anyhow, if you're a member of the Earnings Beats Digest, if you're a subscriber, and again, it's totally free, we will make sure you get room instructions for that Monday event and all of our free events. All right, moving on, taking a look at the Wednesday action. It was a little wild on Wednesday because we started off the day, first of all, futures were green. And so the market looked like it was going to get off to a pretty decent start. But at 8:30, we had the June CPI report come out. And I'll go through those numbers in just a bit, but it was hotter than expected and futures tanked. We saw, I know the NASDAQ was up probably, I don't know, maybe 0.4% or maybe 0.5% pre-market. And the CPI report came out and the NASDAQ quickly went down about 2%. So it was a pretty significant drop in pre-market action. We didn't, we came off those lows when we opened. We did see a market rally throughout much of the day, but then we kind of rolled back over again late in the day. So overall, given where we were headed early in the morning, I think it turned out to be a really good day for the bulls. But still, when you look across the board, we were looking at negative price action. Dow Jones Industrial Average lost just a little bit over 200 points. S&P 500 down 17, NASDAQ down 17 as well. But on a percentage basis, NASDAQ was only down about 15 hundredths of a percent. So, right between 1 2/10 of 1%. So not really a big deal considering where we were at the open. Mid caps down about 0.25%, small caps down a little bit more than that, down about 0.3%. Looking at the sectors, there were only 2 sectors that were higher on Wednesday. Both of them were the consumer sectors. Kind of interesting. Discretionary rose about 0.8%. Staples flat, but still on the positive side of flat, up just a little bit less than 0.1%. The other 9 sectors were negative, led by industrials down 1.2%, healthcare down about 1%, financials down about 0.9%. And all of these groups, every one of these indices, as you can see, struggling to get back through the 50-day moving average, and in some cases, struggling just to stay above the 20-day moving average. The discretionary group did open weak, but then rallied and got back up close to the 20-day, actually was above the 20-day intraday, ended up closing just a little bit below that 20-day. 20 days at 143.18. XLY finished at 142.66, but it had opened down in the 130s, around the 138 area, I believe. So overall, again, not bad action considering where we started the day, but still overall, it did turn out to be a down day pretty much for the market. All right, 10-year Treasury yield. We do have a lot more economic news coming out over the next couple of days. And so we'll see how the 10-year Treasury yield reacts. But here's what I was talking about earlier. You can see we got up to about 307 on the high and then came back down and closed at 290. The low was right at 290. It was just a big, big reversal. And if you take a look at the 10-minute 5-day chart, you can see here was that morning reaction. This is what you would expect with a inflation report that comes in hotter than expected. If you think inflation is going to be a problem, you want to sell bonds. You want to get out of bonds. And when you sell bonds, the yield goes up. The Treasury prices go down, Treasury yields go up. Always a 100% inverse relationship there. So if you're seeing the yield going up, it means that Treasuries are being sold. When yields are going down, it means Treasuries are being bought. So given that backdrop and given the hot inflationary report, by the way, the June CPI, headline CPI, rose 1.3%. Expectations was for 1.1%. If we strip out food and energy, the core CPI for June rose 0.7%. The market was expecting 0.5%. So inflation hotter than expected, you would think that everybody would want to bail out of bonds. And, you know, the Fed is saying they're going to be selling their bonds. So you're almost, it's a little bit of a front running thing to be selling bonds ahead of the Fed. It just seems like everybody should be selling bonds. And yet with a hotter than expected inflation report, the opposite happened. We saw that selling of bonds early, but then tremendous buying. In 1 hour, the yield dropped from 307 down to 290. That was a massive drop in the yield on a day when you got hotter than expected inflation. So for me, it's not about the news, it's about the reaction to the news. And when I see this, I believe I'm looking at a market that just doesn't care about inflation anymore. That seems to be the old story. And now the new story is the recession. Well, to some folks, that's the new story. I was talking about the upcoming recession months ago. I said we would move from inflation to recession talk. And I believe by the fourth quarter, the recession talk is going to be replaced by deflation. Because I think the lowering demand as a result of the recession, combined with the supply chain issues being resolved and the Fed continuing to raise rates, I think they're going to raise one more time. I think that's probably going to do it. But I think that combination is going to lead to lower prices ahead in terms of inflation. I think we're going to be looking at the possibility of deflation. And that is going to change everything at the Fed. I believe at that point, instead of the Fed looking at the Fed and thinking they're going to be hawkish, I think that whole thing will change and we'll be looking at the Fed being much more dovish as we head in later in the year. And that's why I believe growth stocks are going to explode later this year. I mean, they've already done pretty well coming off the bottom. Even before the bottom was set on the S&P 500, growth stocks started to get back into favor back in May, some even back in April. But for the most part, it began from May to June. As the S&P went down, we saw money rotating into growth from value, which was very interesting, which is the main reason, or one of the main reasons, why I believe we bottomed in June. Anyway, 10-year Treasury yield, you can see getting hammered back down all the way down near 290. We'll see what happens tomorrow morning, Thursday morning. By the time you're hearing this, the news will already be out. June PPI and core PPI. Initial jobless claims. So you got the inflation reports, but then you've also got jobless claims, which have been coming in ahead of expectations for the last several weeks. And that paints a more recessionary type picture. On Friday, we've got June retail sales. We'll see what happens there, but we are expecting a big turnaround. At least that's what Wall Street's expecting. I'm not so sure. But June retail sales right now expected to rise 0.9%. We'll find out about that on Friday. All right, let's move on to talking technically. Just want to go over a couple quick charts with you. Again, S&P 500, I like to review this every day. Still in the downtrend, but today's action, given where we started the day, I think this was actually pretty good. We closed back over 3,800, even though we got down below 3760 early in the trading day. And the S&P did turn green for a little while before pulling back late in the day. But still, again, hollow candle, given what we saw at the open with the news and all with inflation, I think just about everybody would have taken this little hollow candle bouncing off a recent price support. I think that was a good reaction, good market reaction to what appeared to be a pretty bad economic report. 10-year Treasury, again, I'd bring this up again just because it's a couple of things I wanted to point out that I'm watching. First thing I would say is let's watch this trend line. I mean, I think it's pretty clear at this point that, if we can get back up and close over the moving averages and this downtrend, then I think maybe we're going to head back more towards sideways consolidation. But today we failed at that trend line and came back down and closed at the low. So what I would be watching to the downside is this area right in here. I'm going to say 270 to 275. Right about there. So you can see the lows here. Let's get the arrow there for you. So we got that, and we got that. We got this. And so that's what I'm watching to the downside. If we move much below 270, I think that would be a tremendous rotation back into bonds. And again, if inflation is a big problem, who in their right mind would be buying treasuries that are yielding 2.9%? I mean, I know there's a lot of folks out there think that we've got runaway inflation. I am not among that group. I've said a couple of times now that I was wrong. I thought that inflation would be gone by now for sure. I did not expect it to last as long as it has. So it's definitely been more persistent than I thought, but I still do not believe it's a problem. I don't think this is a systemic problem with inflation. I think it is a pandemic-driven problem that is going to correct itself, number one, because of the Fed being hawkish and raising rates. Two, because of the recession that I believe we're already in. And then three, because I believe supply chain issues are going to catch up. Once demand slows, it's going to be easier to ramp up production and get the supply level where we need to. In fact, I think we're probably going to overshoot again and we're going to have inventory buildup, which is deflationary. I mean, once you've got inventory and you can't get rid of it, what do? You lower prices. I think that'll be the next story. And it's probably coming in the next 2-3 months as we head into the fourth quarter. Anyway, on the 10-year Treasury yield, this is what I'd be watching. Watch this trend line. Short term, if we can't get back through that, then we are on a crash course for this 270, 275 area. And if that gives way, I'm telling you, I think that's going to be a license for growth companies to print money in terms of their stock market performance. I expect that they'll do very well if rates start to break back down and head lower again. And I do think they'll head lower. I don't think we're going back to zero, but I wouldn't be surprised to see us back in the low 2s on the 10-year Treasury yield. I think that's very possible. And if it happens, then I expect you're going to see growth stocks doing extremely well, which is why I think it's time to be positioning in some of these beaten down growth stocks. All right, I'm going to go through the Dow 30 now, and I'm going to try to go through them very fast. This is a daily, this is looking at the daily charts. So Apple, which I thought topped earlier in the year, wrote about it at StockCharts in my blogs, had multiple articles where I've written about it. 180, I thought we could go down the 120s. We got down in the 120s, barely. I think we're trending higher now on Apple. I like today's test of that rising 20-day and the bounce. I like the AD line, or excuse me, the PPO line moving back above center line resistance. I think Apple is in an uptrend. I expect it to go higher. Amgen. I just think Amgen's sideways consolidating. Nothing wrong here. Nice uptrend. Double top pretty close to that 257.5 area. Double bottom close to about 229. Right now we're kind of in the middle. I just see sideways action here. AXP been downtrending, but as we keep going lower, look at all these hollow candles and look at the PPO turning higher. I think we're going to see an advance coming up on AXP. Boeing, love the breakout here. 20s now above the 50. It looks like we're trending higher. PPO is strong. I think there's a different look to this chart now. Caterpillar trending lower, but look here at the bottom. PPO now starting to turn back up, even though price action's been trying to go lower. I think that's probably going to put a bottom in here for Caterpillar. Salesforce.com put a low in May, down around the 152 area, 153, something like that. I think that's a key area. So any kind of a move back down into the 150s, and I would be a buyer of CRM. Cisco Systems, big gap down. This looks like an exhaustive gap to me. After selling from back in December, starting at $63, this was a huge gap down, went all the way to 41. That's about 1/3 of the market cap of Cisco that's been lost in the last, well, in those 4.5 months. I just think right now we're consolidating. As long as we don't close below $41, I like Cisco. CVX, I think the oil stocks are having some troubles. Short term, because of Max Payne options expiring, I wouldn't be surprised to see a little bit of a pop here. Maybe we'll get $5 to $10 on CVX. Longer term, though, I don't like it. I think we're going to head lower. Disney, this is one of my favorite stocks, I think, right now going into the second half. Of all the beaten down stocks anyway. I mean, as you look here, this low, look at the PPO. This low, look at the PPO. This low, look at the PPO. It seems like momentum, the selling momentum is drying up. Volume has been coming out. I think we're going to rally here on Disney. It may have started with that reversal earlier or later in the day on Wednesday, I should say. Dow Holdings, big sell-off, broke down below this prior low. We do have a positive divergence, so don't be surprised to see this back up into the mid-50s, but I don't know long-term. I'm not a big fan of what's going on here on the chart. Goldman Sachs been trending lower for quite a while. I think we've got really good gap support right in here around the 286 to 291 level. Today's low got down just below 286 before reversing. I would expect the stock to trade between 286 and about 306. That's what I'd be looking for short term on Goldman Sachs. Home Depot been trending lower. Trying to get through the 50, hasn't been able to yet. Trend line remains lower. I don't know. I'd be careful if you lose 280 support. I think right now we're just kind of between 280, 290. Let's see which level goes first. Honeywell broke down, but again, PPO starting to turn up. We're seeing a lot of these positive divergences. That makes me much more bullish. I just see slowing momentum to the downside. I see rotation, so many things to me pointing to a market bottom. So I think Honeywell will probably rally, maybe get back up to that 185 area. IBM, I still remain very bullish. I think we're in a nice uptrend. The problem with IBM is, go back 10, 15 years. It's got to get through $145. It keeps stalling. It's done this multiple times over the last 10 to 15 years. 145 is the number. We close above 145. I think you want to be in IBM. Intel trading lower. Look at that PPO though. Strong PPO, positive divergence. I think we're going to see the stock run to 40, 41. Then we'll reevaluate. Johnson & Johnson, well, breaking back down below its moving averages, but you can see all of this movement below and then above, then below, above, below, above. This is just reeking of sideways consolidation. I don't think you can pay attention to these moving averages right now, simply because we keep going up above and below them. I'd pass on the moving averages. JP Morgan, by the time you're listening to this, they will have reported their earnings in the morning. I think their earnings are going to be okay. I don't know that they're going to be great, but even if the stock gaps down, I would be a buyer. I think these bank stocks are going to have a run in the second half. I'm seeing positive divergence here on JP Morgan as price action keeps moving lower. I'm seeing a lot of hollow candles. I think stock, maybe we get down to 109 or so, but from there, I think we're probably going to move back up, maybe to about 120, 125. Coca-Cola, very similar to the chart I looked at what was the one I looked at? Johnson & Johnson. Yeah. Johnson & Johnson, Coke looks somewhat similar. A lot of ups and downs. The one thing I do like about Coke is that it has been a leader relative to the soft drinks index. It has pulled back the last couple of weeks, but overall it's been strong. Soft drinks, very strong relative to the S&P. So I do like Coke, probably better than Johnson & Johnson. I would look for maybe this 62 level to hold, and perhaps we can move back up into the mid 60s. McDonald's got to break back up above that April high. I think it's going to happen. I like right now what we're seeing. Looks to be trending up above the 20-day, which is above the 50. I like McDonald's, but I'd like to see it close over 257. 3M, once again, there's positive divergence. PPO turning up. You can see here prices going down. Look what happened over here. Lower prices, higher PPO. What did we do? Went to the 50-day, went to the PPO reset at the center line. That's what I'd be looking for here. So we could see maybe 140, get that PPO back up near the center line, and then reevaluate. Merck, it's pharma, been very strong, trending above its 20-day, which is above its 50. This is one of the stronger stocks in the Dow. I still like Merck. Microsoft, big move down on Tuesday, tried to reverse a little bit on Wednesday. It's got some work to do. I think it's in a trading range. I'm going to call it 242 to about 275. Nike, downtrending, not really seeing a whole lot here. Footwear's been weak. Nike's been weak. Need to see at least a close above the 20-day to begin to get excited. So until then, I'd probably just pass. Procter & Gamble, back up to the 50-day, trying to get through. Excuse me. We're actually squeezing 50-day moving average resistance, 20-day moving average support. Which one breaks? Travelers, TRV, I think we're in a downtrend here. Connect these highs coming down, connect these lows coming down. This is a channel to the downside. We just broke down below the low at the end of June. It looks to me like Travelers is going to go back down and test that 160 area. UnitedHealth reports on Friday. Not a great day yesterday, but overall, This is a very interesting company because they have beaten Wall Street estimates, bottom line, 58 quarters in a row. Will they make it 59 on Friday? I bet they will. I think it's going to make a run back up toward the recent highs. Visa, downtrending. It's just not been good. I mean, if you look across here, I think it's pretty clear 187 to 190, right in this range. You really want to hold this area of support. I do like all these hollow candles, but we need to get through gap resistance at about 206, close above that level before I think the stock has room to maybe make a little bit more move to the upside. Verizon Communications sideways consolidating, trying to get through 5150. Walgreens Boots Alliance downtrending, right on this trend line going down. I would expect maybe a move back up, maybe 39, 39 and a half. Would be looking for a whole lot more though than that. Last one is Walmart. Big gap down. There's your reaction high. That's your trading range right now. I'm going to say 117.50 up to about 130. We're sitting right in the middle of it. I don't really have any big, strong feelings about Walmart at this point. Lower end of the range, I'd be a buyer. Upper end of the range, I'd be a seller until, it moves one way or the other. All right. Earnings spotlight. I mentioned UNH. I just want to say this is a stock that reports on Friday. You can see the AD line has been very strong. I think that's indicative of accumulation, even though we did have a rough day on Wednesday. I wouldn't be surprised to see this rally later in the week, especially after that earnings report on Friday. All right, last thing I'll do here is the three you must see. Start off with Extreme Networks. Big rally on Wednesday. Big volume increase. I think I'm not going to draw it, but you can probably see this channel or trend line, even a channel line that's been coming down. That big volume broke it. Look at the AD line moving to about a 5-6 month high. I think EXTR has turned the corner. I like it. GOSS, this is a frustrating one for me because personally, I liked it on the 20-day test. And when it went back down, closed below the 20-day, I got stopped out. 2 days later, stock went up 32%. Sometimes the market's not very fair. This is one I felt like I liked it. I like this move to the upside. I thought it had broken the downtrend. I wanted to see it bounce off the 20. I thought that hammer was going to do it. Next day it went down. I got stopped out with a loss. And now we printed the hammer on Tuesday, and Wednesday absolutely exploded back to the upside of 32%. And then the last one I will talk about here is IRTC. Irhythm Technologies. I like that volume that came in, the gap up around 130. Let's give you that exact number. We opened at 131.01. Today, we got down as low as 130.10, but we closed at 132.55. I think as long as we hold 131.01 on a closing basis, actually even today's open, I would say 130.87. If we can hold that, I feel pretty good about the stock. I think we're going to make another run, probably up here to challenge maybe the 150, 152 area. But gap support and the moving averages need to watch the downside. All right, that's it for me. Again, go over to Earnings Beats. Make sure you sign up for our free Earnings Beats Digest newsletter. Join me on Monday for the Q2 earnings sneak preview. Love to see you there. Anyway, everybody have a great day. Happy trading, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.